At MTA, we specialize in making accounting simple and understandable, so you can focus on your business goals.
You have just purchased a prime brownfield site for development, but as the first excavator breaks ground, it unearths a layer of rusted industrial waste hidden beneath the surface. Cleaning this up often creates a massive, unplanned hole in the budget, but the UK government provides a specific mechanism designed to absorb these exact costs: Land Remediation Relief, or LRR. My tax accountant helps property developers navigate the filing requirements and identify which specific expenditures qualify for this relief under the latest 2026 standards. In this video, we will map out how to assess your site's eligibility, how to navigate the strict rule changes coming in 2026, and how to claim up to 150% in tax relief on your cleanup costs. By the end of this process, you will see how LRR functions as a capital recovery tool, letting you recoup a significant portion of your decontamination budget through a direct tax adjustment. Step 1 is ensuring you have the right corporate structure. LRR is entirely off-limits to sole traders, freelancers, or individual employees. To qualify, your project must be run through a UK limited company that pays corporation tax. Despite its high value, this relief is used by a small fraction of developers. In the last reported financial year, only 1,750 claims were filed across the entire UK, largely because most owners are unaware their site preparation costs qualify. The relief targets specific hazards. This includes industrial byproducts like asbestos in old buildings or chemical pollution in groundwater. It also covers naturally occurring threats, specifically radon, arsenic, and Japanese knotweed. If your site requires the removal of heavy structural elements, like reinforced concrete basements, you can claim these under the derelict land provision. However, the site must have been continuously abandoned since April 1, 1998 to qualify for this specific category. There is one absolute restriction: the polluter pays principle. If you or any connected party caused the original pollution, you lose all eligibility for the relief. Establishing that your company has a major interest in the land and proving the contamination was caused by a third party are the two non-negotiable foundations of any valid claim. This brings us to a major financial hurdle arriving in April 2026. The lower rate of landfill tax is increasing by 115%. Looking at this chart, you can see the flat historical rate before it spikes from $4.05 to $8.65 per ton. This makes digging up contaminated soil and dumping it into a landfill significantly more expensive, making LRR more important for offsetting costs. This cost pressure is especially severe when dealing with the invasive Japanese knotweed plant. Because of its capacity to damage building foundations, it is the only plant specifically named in UK tax law. If you discover knotweed on your site and delay treating it, allowing the plant to spread, HMRC can label you as the polluter. That instantly voids your entire tax relief. Furthermore, the new failure to prevent fraud rules require exact record keeping. You must separately document your remediation costs, lab fees, and risk assessments to distinguish them from your general building expenses. With landfill taxes increasing and compliance tightening, LRR has become a necessary tool for recovering the high costs of preparing brownfield sites. Let's look at the exact math of how this relief works. This table shows a baseline scenario where a company spends £100,000 on qualifying remediation, like asbestos or knotweed removal. Under LRR rules, a company records 150% of those qualifying costs against its taxable income. That £100,000 spend results in a £150,000 total deduction. Assuming a 25% corporation tax rate, this enhanced deduction reduces your tax bill by £37,500. This represents an additional £12,500 in tax savings compared to a standard business expense. If your company is currently loss-making, you can surrender that $150,000 loss to HMRC in exchange for a 16% cash credit. That results in a $24,000 cash payment sent directly to your business. Additionally, starting in January 2026, a new 40% first-year allowance is available for main pool plant and machinery. This provides immediate capital advantages if your cleanup requires purchasing heavy equipment. Effectively, LRR allows developers to recoup up to 24% of their decontamination costs, providing the liquidity needed to continue the construction phase. To secure these funds, you have to watch the clock. Your LRR claim must be documented and submitted via your CT 600 corporate tax return within exactly 2 years of the end of the accounting period. Managing your corporate structure and identifying specific contaminants creates the necessary evidence for a valid claim, resulting in a significant tax recovery on your site preparation costs. To maximize your claim while remaining compliant with the new 2026 rules, contact My Tax Accountant. Our specialists are ready to help you evaluate your site expenditure. If you found this guide helpful, please like the video and subscribe to our channel for more essential UK tax strategies. Please note, this video is for educational purposes only. Tax laws are complex and subject to change, so always consult a qualified professional before making financial decisions.